Who are Fannie and Freddie, and why do I need to know them? That's a great question, and you probably have heard the terms or the names Fannie Mae and Freddie Mac mentioned at some point in the last few years. And it's pretty complicated, honestly, but let me try to spell it out for you. Fannie Mae and Freddie Mac are private institutions. They are not owned by the US government. There are other loan programs that are US government, like the VA and a VA loan, or the Department of HUD, or Housing and Urban Development, that oversees FHA loans. But Fannie Mae and Freddie Mac are two companies that are privately owned that control a large portion of the housing market. Now, what do Fannie and Freddie do? Well, Fannie and Freddie set the guidelines for how you can borrow money. What documentation is needed for you to borrow money? What do they want to know about you to determine if you can repay the loan that you're about to buy? Because really, that's what it comes down to. When you buy a house and you get a loan, are you going to be able to make the monthly payments on that loan throughout the term of the loan and then own that house? That's all they really care about. That's what Fannie and Freddie do. So Fannie and Freddie have set guidelines that if you fall into their box, you qualify for their loan. They will securitize your loan, means they will back your loan. Well, that sounds super important, and it's a big part of our economy. So is the government involved in that? If they're private companies, the answer is, again, convoluted, but yes, the government has a lot of oversight over Fannie Mae and Freddie Mac because they're such an integral part of our housing, and housing is such an integral part of our economy. So we call them quasi-governmental institutions. They're privately owned, and buddy, you can believe they've made some serious money the last several years, but they are heavily orchestrated by the government to make sure they're not being irresponsible with their lending. Remember 2008, our economy crashed, housing crashed in particular, and many feel like the housing crash is what caused the overall economy to crash. They felt like that happened because Fannie Mae and Freddie Mac got too loose with their lending guidelines. Well, that's up to you to decide. We could have a debate on that. What did happen was the government came in and said, hey, we're going to put some guardrails in for Fannie Mae and Freddie Mac. We don't want them to be able to make their own rules. We want them to be able to run their own companies, but within the rules that we lay out. So you hear the term conventional mortgage. A conventional mortgage is just a generic term for loans that are insured by Fannie Mae and Freddie Mac. Does that mean they own your loan? Well, no. Nobody that you know owns your loan. Fannie Mae doesn't own it. Freddie Mac doesn't own it. Weber Mortgage doesn't own it. The lender that's servicing your loan doesn't own it. Your loan is most likely packaged up with other loans and sold as an investment vehicle on Wall Street called a mortgage-backed security. But those mortgage-backed securities, when someone is purchasing them, if the loans in that pool were underwritten by Fannie Mae, then that purchaser of that security knows these are the guidelines that were used. So they can evaluate the risk of investing in that loan. And that's why we have Fannie Mae, and that's why we have Freddie Mac. Are Fannie Mae and Freddie Mac the same? What are the differences? Well, they're not the same. They're separate companies. They're similar in the sense that they're both considered conventional loans, but their guidelines are different. Are they way different? No, not as a general rule. Most people would tell you the guidelines are similar, but there are situations where using Fannie Mae might be more advantageous to you than securing your loan on a Freddie Mac loan. For instance, income might be calculated differently, or one might allow a gift from a certain person where the other doesn't allow it from that person. One might calculate a minimum payment on a student loan differently than the other does. So it's super important that your mortgage professional understand Fannie Mae and Freddie Mac and their guidelines, because those guidelines can help you get a better mortgage deal. So when you're talking to a loan officer, hopefully a Weber Mortgage loan officer, but any loan officer, your educated question to them might be, How well do you know the difference between Fannie Mae and Freddie Mac loans? Are you going to be able to tell me which I'm best suited for? If they can't tell you which you're best suited for, they might not be the right loan officer for you. So Fannie Mae, Freddie Mac are quasi-governmental entities that are privately owned and that write the guidelines that ensure that your loan, hopefully, is going to perform, and therefore an investor can purchase a vehicle that includes your loan and others. If you have questions about this, I'd be happy to talk through it with you. Just pick up the phone and give us a call.